if there are rumors that the US government is going to revalue its physical gold, taking the physical gold price, just let's say $4,300 right now, to $8,000. So that's just a wild speculation on my part, but
Right.
it's possible, right? Or like, let's say Judy's wrong, it doesn't happen in 2026. This can happen in 2027. But
Well,
as I understand, like the midterms are coming up at the end of 2026, the midterm elections in the US. Those people who hold the 999 physicals to sell their silver back into circulation to the exchanges to do that. Okay. So that's just my speculation, but based on the price movement of silver, evidence of physical tightness of physical silver, all these places around the world, I think $100 by Q1 of 2026 is possible.
In a recent discussion, Eric Yeung, a market commentator known for tracking precious metals trends, shared speculative thoughts on where gold and silver prices could head if current conditions continue. Yeung emphasized that rumors of a potential U.S. government gold revaluation, even if unconfirmed, could prompt the market itself to reprice physical gold, potentially driving prices from around $4,300 to much higher levels over time. He also connected timing to broader political and economic cycles, noting that U.S. midterm elections in late 2026 may influence fiscal and monetary sentiment. According to Yeung, even if major changes don't occur in 2026, similar dynamics could unfold in 2027. On silver, Yeung highlighted global physical tightness, suggesting that higher prices may be required to incentivize holders of 0.99 physical silver to sell back into circulation via exchanges or refiners. While stressing this is speculation, he believes a $100 silver price by Q1 2026 is possible if supply constraints persist. Now, we present the clips from Eric Yeung's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
The people who are buying physical gold and silver right now are the strong hands, okay? Are the smart money, the people who have money, okay? So they buy right, especially right now, they're buying physical silver because obviously, with the gold and silver ratio above 60, it's still pretty high.
mhm.
And a lot of these people, the smart money, see that silver is a better deal than physical gold. So they're buying a lot of the Shanghai Gold Exchange standard physical silver bars, which are 15 kilograms approximately each piece. We're still in a structural deficit of silver globally. And I shared the charts with you, Danny. I don't know if you see it.
Which
I
one?
sent it to you on X. The one that Bruce shared. Bruce
This one?
Ikemisu. Yes, that's the one. So what happened is beginning of this week, Robert Goddard, he was the guy who ran the bullion banking business at JP Morgan and he retired. So he came out and said recently that the silver lease spiked up around 7-8%. So I don't know if you recall, Danny. Previously on your show, I explained that normally silver lease rates are like at around 1-2%, like
Mhm.
next to nothing, basically. You can see on the charts, right?
Yeah.
Like you see how normally it's 1-2% in historically speaking.
Mhm.
And then in the October, fiasco, if you look at the charts, it spiked up to like I don't see it right now on my screen, but like in some reports came back said the lease rate exceeded 100% in October of this. Okay,
Wow.
so it dropped,
So
subsequently because as you know, and I reported this on multiple platforms, the LBMA was getting silver and still getting silver from primarily from the COMEX, and they also leased some physical silver from China. Okay, there's another story behind that one. Okay, we can talk about that later. But they got some silver from China, but primarily from the COMEX to alleviate the situation. So that's why the lease rate dropped. You see how it dropped
mhm.
after October? But then Robert Goddard was saying that the silver lease rate slowly crept back up, since last, and it hit, like he said, around 78%. So Bruce Ikemisu, he is a senior member of the JPMA, okay, which is the Japanese version of the LBMA, essentially. He shared this chart that basically mirrored or confirmed what Robert Goddard said. So I believe on the chart that Bruce shared, the lease rate is looking at around 7%. So what does that tell us? That tells us that even with the LBMA sucking physical silver from the COMEX whenever it can, the physical silver tightness at the LBMA is creeping back in, okay? Because even 7% is pretty damn high at the LBMA for physical silver leasing.
Eric Yeung explains that today's buyers of physical gold and silver are the strong hands and smart money, with the gold to silver ratio still above 60. Yeung notes that many investors see physical silver as undervalued, driving demand, especially for 15-kilogram Shanghai Gold Exchange silver bars. He highlights an ongoing global structural silver deficit, reinforced by unusual movements in the silver lease market. Former J.P. Morgan bullion head Robert Gorman reported lease rates spiking dramatically, far above the historical 1-2% norm. Even after temporary relief from COMEX and Chinese supply, elevated lease rates signal renewed physical tightness at the LBMA, underscoring growing stress in the silver market.
So silver is obviously not enough to reliquify the physical silver free float for the entire world, okay? I don't know if you see that, but just based on the lease rate that is creeping up right now, possibly going to be above 8 or 10% by next week, shows us that the biggest OTC market in the world for physical silver, which is the LBMA, is again experiencing tightness, in actual physical silver that it can acquire and deliver to its customers. So again, back to what I just said, reliquify the free float physical silver for the entire world. That just simply means, Danny, that, when we get up to a high enough price, then the physical silver holders, okay, of the correct format, by the way, which is the 999 purity physical silver, not the junk silver, okay?
Mm-hmm.
So the 999 purity silver that can easily be resmelted into the bigger bars for the global exchanges like the LBMA or COMEX or the SGE, okay? So to get those people who hold the 999 physicals to sell their silver back into circulation to the exchanges, okay, or via the smelter, okay? I think it would take more than $100 to do that, okay? So that's just my speculation, but based on the price movement of silver and evidence of physical tightness of physical silver at all these places around the world, I think $100 by Q1 of 2026 is possible. The retail crowd is still looking at gold, silver, and the miners, especially the gold and silver, and they're saying, well, it's very high. The prices of gold and silver. Is it going to dump? I mean, Danny, I'm sure you get the same questions from people that I do. Every day, people come to me and they ask me, Eric, when are gold and silver prices going to dump to a very low level so that I can load up? So I get, that's actually the number one question that I get on red notes in China, okay? So people, they are not confident of, gold and silver prices staying strong at this current level and going up from this current level. Rather, they're looking at a imminent correction of gold and silver price. So therefore, if a lot of these retail guys are not even confident of gold and silver prices, what do you think they are doing with the mining, right? They're probably selling the miners for whatever small profit that they got from it, for holding like a month or a couple months or whatever. So I think that's where we're at right now, which is, for lack of a better word again, is the weekends holding the gold, silver, and the miners to the strong hand. So the strong hands are buying the gold, silver, and the mine from the weekend. I think if the global US dollar liquidity doesn't implode. So if there's no black swan and global US dollar liquidity doesn't contract very quickly, like what happened back in March 2020, if that doesn't happen, I see physical gold price making a new high, potentially above 5,000 US dollars per troy ounce, very quickly, probably within the next 6 months. Okay. And silver, like you said, I see the same thing. I see silver probably rising above 100 US dollars per troy ounce within 6 months if US dollar liquidity doesn't implode. Okay, so that's number one prediction. Number two, I see that that this physical silver unavailability, a lack of availability, okay, or physical silver free float being inadequate globally, I don't see that being resolved until the physical silver price exceeds $100 US dollars per troy. Okay, so that's my second prediction. And the third prediction that I see, that I have here is that in 2026 we might see, major industrial players like Samsung or BYD in China, like the battery makers. Okay, the people who make the lithium ion battery for the modern world, like for the electric vehicles, for your cell phone, for your laptops. Okay, I see them potentially coming out to the public and announcing that they are very near at launching and mass producing silver solid state battery, which is a new tech that relies heavily on physical silver.
Eric believes global physical silver supply is far too limited to reliquefy the world's free float at current prices. Rising silver lease rates, potentially moving above 8-10% signal renewed tightness at the LBMA, the world's largest OTC silver market. Yeung argues that only prices above $100 per ounce would motivate holders of 9999 purity silver to sell back into circulation via exchanges or smelters. He notes retail investors remain skeptical, selling miners and waiting for pullbacks, while strong hands quietly accumulate. If US dollar liquidity holds, Yeung sees gold above $5,000 and silver over $100, with future demand boosted by emerging silver-based battery technologies. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. Thanks for watching.